This is the low from June 2022. This is a new lower low. These are a bunch of retail investors who thought the bottom was in. My name is Nick and welcome back to Cheeky Crypto. Today, guys, we're going to be talking all about BTC, what's been going on most recently, what I kind of think is likely to happen next, and all that wonderful stuff. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, subscribe, tap the bell, select all the notifications, and in doing so, you'll stay up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, links in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not check it out? It is, as I said, free. Let's get into this then, right? Let's start talking about Bitcoin. So let's jump on down into the charts. Here we have our new daily or the daily time frame here, and we have the new lower low, right? We've been talking about this for months. Okay, so we can see the June low over here, and we can see the new lower low over his side. Now, obviously, there's been a lot of talk about new lower lows for the last several months. I say several months, but pretty much since this move to the upside here was all corrective and nothing here was trending, I've been pretty much saying that we've got to go down into new lower lows. Okay, so as accurately predicted, or as actually predicted, we have come down into new lower lows. Now, there's a lot of comments on the YouTube videos for the last few months, basically just saying, things like, bottom is in, learn to chart, learn what you're doing, this makes no sense, you don't know what you're doing, yada, 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 all these kind of negative comments. But what I do want to say is that the majority of the community have been really positive and really good during this moment of volatility that we've seen since June, right? And really this video is dedicated to the minority of the people who were saying that I was wrong, and now I get to sit here and say, no, I wasn't. So this video is really dedicated to you guys, and obviously for the majority, this is business as usual. There's nothing unusual going on here. This was exactly what we were expecting to happen, so let's crack on into it, right? So here we have Bitcoin on that daily chart. We can see that our targeted range was down here at 16,300 and 16,700. It did fall a little bit short of this. So we're going to have to try to figure out whether or not we think the damage is done or whether there is more to still come here, because we haven't quite hit the expected range. And I still think we can bounce around a bit and still go down much lower anyway. So I'm not thinking that the bottom is in. New lower low is not the bottom. But I do think we're progressing nicely. And I'm going to go through the usual kind of data as quickly as I can. So get you up to speed with what's been going on most recently. Now, obviously, we have to consider what's been going on with the DXY. Okay, and now the DXY, when it goes down, your crypto assets should go up, right? However, we have those black swan events that really were not black swan events. So if you're a Patreon member, you will know that days ago, absolutely days ago, Chris was talking about FTX. In fact, he has been talking about FTX for quite some time, and he gave you a really good heads up on this one. Like, people were making serious money on the backs of FTX within our server. So it's important that we understand that people are going to want to call it a black swan event. No one could have predicted the FTX, but actually no. Yeah, Chris did. So it's one of those things. If you're actually paying attention to things, you can pick up on this stuff a lot earlier. So yeah, a lot of people were making a lot of money on the back of the FTX. So although the DXY was going down, so was crypto assets. This is pretty much driven from a little bit of fear in the space. And I say a little bit of fear. There's still reasonable amounts of fear, but it's not quite where I think we're heading yet. So a lot of people are getting a little excited, and I think, we're at lunar lows. This is a new bottom. We can buy up here. We're going to make loads of money. But that's calm. Stay calm. We aren't there yet. There's still a lot more room to go. So looking at this, we've come down to at least our minimum expectations down here, right? So our C wave could finish there, and we could bounce up a bit. That's possible. But we're going to take a look at the smaller time frames to figure out whether or not we're going to go down into these ranges. Got to bear in mind that our $15,000 level. Let me find my order blocks here. This one here. This is 15K, right? This order block here. This is where the buyers are on this daily chart. So we have to be aware that essentially this is where the majority of people are likely to be looking to buy. Now, these are really kind of based more on the Bollinger Bands to a degree, but it'll help us understand roughly where that kind of number is going to be. It's not going to be 100% accurate. It's not actually feeding in actual buy order data. Just bear that in mind. So it gives you a rough idea. It's around $15,000, 15 to 15 and a half. Elliott Wave theory has this little slot plotted out at 16,300 to 16,700. But on our weekly time frame, you can see that there is the 14,645 as a potential issue. And if I come over to this chart here and take a look at this one, take a look at this one, and we'll throw this up to our weekly. Here you can kind of see there's several issues on here as well. You can kind of see these ones in here. But if I come up to the monthly, you can see again these areas that we're now below this level. Okay, and we've been talking about the 13,880 as a potential support level on the monthly time frame. Okay, so we were hoping to close above. We closed above the 19,666. This was the previous 2017 all-time high, right? And this is the first time we actually closed a monthly in September below that level. Then we closed October above that level, and right now we're below this level again. So really testing this range here. If we do lose all of this, and specifically if we were to close below this particular demand level that I have marked out here, which comes in on the low of 17,549 at the end of November, if we close below that, and you can see that we've already wicked down lower than it, then this is essentially going to be an incredibly difficult time for cryptocurrency assets, okay? And 13,880 would be the place to be thinking about. So just bear in mind that there's a few things here that we've got to consider. Okay, we've broken down quite nicely, but I still think we've got more to go. Let's go down to the smaller time frames. Let's go to the hourly. Okay, so here we can see that we were talking about this move to the upside. We actually a little while back we're talking about a 21.5, and we kind of got 21,475. We got really close to it. But the analysis, this is just pure coincidence, by the way, guys, because the analysis did change, specifically when we had this wick over here, right? So although we rallied up to what I was talking about a few weeks ago, it is a pure coincidence that we actually hit that level. But it is also just one of those things that we have to understand, that there is a lot of selling pressure at very key specific levels. Now, this actually fell short of what I was thinking out. I was thinking that this particular area here of about 21,750 would have been more the resistance level than it actually was at this particular point here. But again, you can't accurately predict timings on these things, but with all that being said, it's important that we understand that the FTX and the pressure that came from there and all that kind of stuff has obviously compounded down a fair amount. So although, Elliott wave theory kind of shows us the directions of the moves that we're talking about, in fact, this one actually was very close to the 17,290. We came down to 17,160 here, 166. So, Elliott wave theory can't time the market. It doesn't know what's going to create the market to go down, but it's looking and tracking the mentality of the herd, right? So if the majority of people are feeling, specifically, one way or inclined one way, what you would end up with are these kind of W, X, Y, X, Z scenarios, right? Not impulsive targets, not trending, just corrective. And when you have these kind of corrective structures here, for example, they're limited to how high they can go, and you end up breaking down. So it's not a surprise. We don't know what the catalyst is going to be, but we do know that people aren't really backing the price to go up. So they only really need something to kind of spur them on to sell. So we don't necessarily know what it is. We can't predict out what these I don't know, air quotations, guys, here, black swan events. We don't necessarily know what they're going to be. But we do know that there's going to be some kind of catalyst that drags that price down lower. And in this particular case here, we got very close to what we're looking at from this particular structure. And this is very messy, so I do apologize. But you can kind of see here, we have this A wave coming down, we have this B wave coming up, and we had this C wave coming down. So from our hourly chart, this looks like we could be done. However, we need to consider what this move down, this C wave, is comprised of at the moment, because it could be considered a couple of things. And I think what we want to do is we want to see and check whether or not we have ourselves a bit of an impulsive issue here. Okay, and I think we potentially do. So let's go ahead and jump into this, right? So we'd have to take this low point here, we'd have to take this high point from our Fibonacci retracement tool. So I'm going to move it over to the bounce high that we had, taking us back up here briefly, right? So we fell down to 19, we went up to 20, and then we fell back down again. And you can see that we went down as low as 1.618 and then bounced up. This tells us that we're in a 5-wave structural point downwards. Okay, so this tells us that we've got wave 1 up here, and this is a bit of a strange one because it doesn't necessarily look overly neat, but down here is wave 1, this is wave 2, this is wave 3 down here, meaning that all of this is just a wave 4, and we've still got to have a 5th wave down lower, which that 5th wave is going to probably take us into our zone that we had marked out on that daily at 16,000. So let's go ahead and take a look at that. Okay, so let's go ahead and just draw this in here, pull this up, and here we'll look at our targeted range of 1.236 to 1.618, and it encompasses that entire area right there. So basically this would be our range, 16,264 and 16,814. So it looks like our daily three-wave structure has yet to be completed, and we're still looking at this particular area as the demand zone to take us up higher. Okay, so it does look like we need to still come down more. I don't think that we've done corrected yet. This would basically make it a 335 correction, and we'd be done at this point and would look for a three-wave move upwards. What that would look like, no one knows. Okay, it could be the bottom, it could not be the bottom. I don't think it is the bottom, and let me get into why. Okay, so if I bring up my other data, because it's important that we don't just look at the charts, but we also reflect on everything else as well. Here we can see that we have the inflows and the outflows for BTC. Now this basically monitors how much Bitcoin goes onto exchanges versus how much Bitcoin comes off of the exchanges. Now here we can see that yesterday was a pretty volatile day. 90,000 Bitcoin goes onto the exchanges and 92,000 Bitcoin comes off the exchanges. This tells us that the ecosystem, or the crypto space, was flooded with supply, and then that supply was soaked up. Okay, so that initial shock of additional supply coming in basically pulls that price down rapidly. Like, it fell down fast and hard, right? So you see that flood, and then when that price hits those low points, all that supply gets soaked back up again. Okay, so that's what this graph is telling you. It's telling you that there is no significant inflow or outflow at the daily level. But if you were to break this down per hour, you'd probably see a huge spike and sustained inflows before the outflows actually started. This allows you to see that price drop down very significantly whilst the DXY is actually dropping down, which is usually an unusual thing. You don't normally expect to see the DXY go down and Bitcoin go down, for example. But this isn't really what we want to take a look at. This is one element of understanding that there's people buying, there's people selling. But when we come up into the wallets, we get a very clear view as to who was buying and who was selling. Okay, so here we have, in the last 90 days, the retail investors. There's two wallets here. We have the shrimps, or 1 Bitcoiners, and the dolphins, that are 10 Bitcoiners. Okay, so as you can see that we have these huge upticks. We are now rocking 914,631 1 Bitcoiner retail investors. Is a pretty significant amount. They took advantage of this dip as it came down into a new lower low. Okay, although we don't actually see that information here just yet. Now, as we kind of come and take a look at the high net worth individuals, they were actually selling. They're kind of coming out just a little bit, okay? So just bear that in mind. Now, as I come up into the whale wallets, these are your kind of higher net worth individuals. These are your institutions, your traders, and of course, you're just billionaires and multimillionaires, right? Now, over 90 days, you can get this kind of view that, okay, well, whales are coming out. They're just dumping as much as they can. They're not really buying. Your sharks, they're pretty much doing the same. They're not really backing Bitcoin. Your Kraken-sized wallets, on the other hand, are the ones that you want to be cautious on, because these are your institutional players. These are your billionaires. And basically, historically speaking, what they've done is they've accumulated during the bear market and then flooded the entire system, and flooded the market with Bitcoin that drags the price down. Very similar to what we saw yesterday. Okay, and considering we haven't really seen too much changes in these wallets, makes me think that actually a lot of people were both loading up Bitcoin onto the exchanges only to take it back off when that price dropped down, which is, in essence, unnatural. It's not really a normal thing to kind of see. So what I want to do is I want to kind of show you kind of where things are in 2022 so far. So these are your 1 Bitcoiners. You can see they've just been accumulating. There's no one being shaken out of the space yet. And essentially these guys are just backing Bitcoin. The Bitcoin whales, on the other hand, they've been aggressively coming out during 2022 and still remain the same. They're not backing anything. You can see this even from those June lows. All they were doing was selling on everybody who was buying. So it's no surprise that these guys continue to sell. These guys, unfortunately, won't be buying until the retail investors are selling. Okay, they like to buy from the retail investor, and they like to kind of take all that money away from the retail investors. So at the moment, they aren't really doing terribly too much. The Kraken-sized wallet, the one that's accumulating right now, has continued to accumulate during this bear market. This is exactly what happened in 2018, right? This is 2018. They accumulated during the bear market, and then they pulled it all the way down, flooding the market with excess supply of Bitcoin. dragging the price down right into the actual bear market bottom. As soon as they actually created the bottom, they start accumulating again, okay? And the objective of this particular size wallet is to bring the price of Bitcoin down. I believe this is basically cold storage for whales, and what they do in a bear market is they basically store it all up for this one particular purpose of dragging the market down. Okay, and as for the whales, what were they doing in 2018 was basically going sideways during this entire bear market until they got to this point in here. This is where the shrimps were selling, or the retail investors were selling. Right here, you can see it in this flat period, they're selling right here. And so basically the one Bitcoiners, the retail investors, will start getting shaken out of the space, and they sell it to the whales here, okay? And as of course the Kraken size wallet, dropping it right down here, bringing in that low area for Bitcoin. This also happens to be exactly where we have this huge uptick on these whale wallets as well. So there's a few things we have to kind of consider. One, we're not really seeing that bear market scenario, that bottom coming in yet, which means this is just another lower low and not the bear market bottom, okay? So let's not get too carried away, then too excited, thinking that the bottom is in, now we've gone down into a new lower low. That's not what I'm saying. What I'm saying here, guys, is that until this big money starts to actually come in, and until retail money starts getting shaken out of this space through lots of fear or necessity, we shouldn't get too excited, and we should be a little bit more conservative and concerned rather than just FOMOing in. Unfortunately, a lot of people with their magical indicators are not going to be telling you these kind of things. They don't have the ability to take a look at this kind of data and understand it necessarily. And a lot of people just rely too much on the charts and not so much on what's going on in the background. There's a lot of things going on in this world outside of a couple of candles on a price action and a price chart. Okay, you have to consider more variables, specifically when there are a lot more variables that are different in this particular bear market than that of 2015 and 2018. Okay, there's vastly different scenarios going on, actually 2014, sorry, and 2017, 18. So it's important that we understand that there's a lot of things that are different, right? And we can't expect the same results from these indicators, that these indicators are not giving you the correct answer. Just because it's happened before doesn't mean it's going to happen again. And you can apply the same logic to what's going on with the participants. Just because the whales waited to buy until the retail money was being shaken out doesn't mean it's going to happen again. My hunch here, though, is that it is because people are going to repeat their same processes, whereas the price action and these technical indicators running from very specific numbers are going to be different. So just bear this in mind, right? Nothing is set in stone. I could be completely wrong about the whale wallets and the counts of the wallets and where the money is flowing, where the money is not flowing. But equally, so are the indicators. They have been wrong time and time again. That's why I don't tend to use them. Elliott wave theory is what I use for market structure. I like smart money concepts in terms of supply, demand, and how smart money would be moving the market, liquidations and things like that. That seems to be the more logical approach, in my opinion, in 2022. Guys, I'm going to leave this video right there. If you found it useful and informative, smash the like button. I do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe. Tap the bell, select all the notifications, and in doing so, you will stay up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.